As the title for this recording says, I'm looking for a wave to the downside now on the euro dollar on the short term to very short term time frame. This is 1 hour before London is going to open. As you can see, we are at 129.31 in the euro dollar, 151.30 in Great Britain pound US dollar, and 101 on the US dollar Japanese yen. Now for the euro dollar, and actually for the whole trading, currency trading, and for the whole markets, London, UK, and US markets are going to be closed today. We have Memorial Day in the United States, so expect liquidity to be thin, and moves, if we have any move at all, moves to be exaggerated because of lack of liquidity. Now this is the euro dollar 1 hour chart, and from these lows here, as you very well know, we have something that resembles with a leading diagonal, with this being a 1, for example. Let's make this one like this, 10 and black. So 1, 2, and the third wave to the upside, 3, then a fourth one here, 4, and the 5, a fifth wave. So 1, 2, 3, 4, 5 from my point of view, providing that this loads into the 127.95 area hold, and this should be only the end of a first wave, and this first wave would be wave 1 and 12 and red, so this will be the end of wave 1. Now this is a leading diagonal. If you take a trend line and put it like this and like this, from the end of the second wave to the end of the fourth wave, and so on and so forth. So 1, 2, 3, 4, 5 waves up. And now we are looking at a possible A, with this sharp move after Mr. Bernanke has spoke last week in front of the Economic Committee. So A, and then we have a nice B in front of our eyes here, A, B, and we might look for a C wave to the downside. Now we might say, what kind of a B is this one? Well, I don't think that it is done here. We have two scenarios here. And if you give a little bit of a zoom to the market, let's mark also the top here. Then I would say that this is of a lower degree. This would be something like A of a lower degree, to have a double correction like this with a B and C, so A, B, C, then an X, and then to have a contracting triangle, this contracting triangle that you see here with A, B, C, D, and now to have the E wave already, or in the making here, so the E wave, so A, B, C, D, E, and this to complete the B wave black, okay? And if this B wave black is completed here, then we are looking for a C wave black to come to the downside. Now it's going to be extremely important what kind of a move we're going to have on a C wave. Why? Because if this C wave, so we have A, then B here, let me mark the B with a different color, this being the contracting triangle. Let's make this one brown, and like this. So this is actually the triangle we're facing right now. So A, B, C, D, E, and if this C wave comes to the downside but does not take the lows here, let me change the color, and these lows are 128.21. So if the C wave from here comes and not takes those lows, then we have a possible C wave failure for the second wave. And this is a powerful move. This is normally just preceding a powerful move to the upside. So those highs here are going to be taken. So we have one, an A, then a double correction. So we might write here that this is A. This is a double combination, so double combination or correction, whatever you would like to call it, in the form of ABC, then an X wave, and then an ABCDE as a triangle, and this points towards new low. Now, this triangle scenario remains valid as long as this C wave, the highs in the C wave here, are holding. This is 129.44, as you can see the highs. So to have A, B, C, D, E, and then to look for an impulsive move to the downside, but not to take this 27.95 to the downside. So I would settle with something like 128.21. Who really knows? So to have A, B, and then looking for a small or a short C here, move something like until 128.60, 128.50, even 128.40, and then to move to the upside for the new target to the upside. Now again, keep in mind this is 129.30. 129.44 would invalidate this triangle. If this triangle is going to be invalidated, then also we might have the potential here of a head and shoulder. If you take a line like this, you might say that this is a head and shoulder with the head, the left shoulder, the head, and the right shoulder here. So the measured move would be somewhere here. I don't really like this head and shoulder because on the right shoulder, the consolidation pattern looks to be a bit different than on the left shoulder. But nevertheless, this spike here to the upside like this and to the downside like this, and this spike resembles with the head of a head and shoulders. So why not? Nevertheless, keep in mind we have US market being closed today. Also in London we have low liquidity for the same reasons, for holiday being in place. So probably quiet markets, but I see some surprises anyways in those illiquid times. In terms of the week in front of us, an important week in front of us, I think and I'm inclined to think that by the end of the week we will start to see positioning for next week's all-important jobs data in the United States and the ECB press conference and the interest rate. So on a very short term, I'm looking for a small pullback towards the C wave here, but I will try to buy. I will try to look for reversal signals. I will try to buy this area 128. This is the area I'm looking for. So 128.59, 128.50, 128.60. I will try to buy for new highs in compared with this 29.98. It remains to be seen. Now the next recording is going to be before New York opens today, and we'll see what currency pair we're going to look at. Probably the US dollar Japanese yen or Great Britain pound US dollar, depending how markets are moving. So until then, stay safe and bye bye.